Hey guys, what's going on? It's Travis here with JT Wealth. With the market as crazy as it's been lately, I really like to focus in on stocks that I know for a fact are going to put money back in my account. And in this video, we're going to talk about 3 specific stocks that are poised to give you a pay raise come February. So let's get into it. Alright, welcome back everyone. Thanks so much for checking out today's video. Hopefully you find some value, and if you do, don't forget, smash the like button for me and consider subscribing to the channel as well. We're talking about 3 specific stocks today that are huge dividend payers that have been paying consistently for a long time and who historically update their pay rates in February. So we're looking at getting a raise if you own these companies come February as far as how much dividend money you'll be receiving back in your account just for owning stock in these companies. But before we jump right into that, I want to run something by you guys. Hopefully you'll give me some feedback in the comment section down below and let me know what you think before we go forward with this. When Julie and I first started the channel, the hope and goal was to provide some level of financial education and help people set up budgets and understand the markets so that they could invest and save for their future. That's why I like touching on the financial independence stuff and the FIRE movement every now and again, because that's a super important part of why I'm interested in the market in general. So what we're looking at doing is setting up a Wizio account, and that would allow you guys to put in personalized questions that then we would answer with personalized videos. So you would go to the Wizio site, check it out, go to our link, ask a very specific question, and you would get a video response back tailored to your specific question. If something like that is of interest to you guys, whether it be budgeting or dividend stocks or FIRE or anything at all that we can help you with, let me know in the comment section down below and we can push forward with that. Now on to these 3 fantastic dividend stocks and how you might be able to increase your portfolio using them. And this one came out of MoneyWise some days back and said 3 top dividend stocks poised to give you a pay raise next month, that being of course in February. Now with the market being as volatile as it's been in the beginning of 2022, everybody is wondering, what on earth am I supposed to do? You've got 2 options, right? You can either completely jump out of the market and sell everything. We're talking to you, Meet Kevin. Still don't understand this one. Or you apply the tried and true knowledge that timing the market just doesn't work. Time in the market is better than timing the market. Warren Buffett has said that the stock market and wealth in general is just somebody willing to sell and somebody willing to buy, and that the patient people always end up winning out over the impatient people. Being a patient investor and putting your money in solid dividend-paying blue-chip stocks can be an absolute win for the long-term investor. And right now you have an opportunity to buy some of these stocks at really affordable prices. And with inflation at 40-year highs, you might as well set yourself up for success by buying into companies who have been increasing their dividend year over year for decades and who are set to do it again, theoretically giving you a pay raise next month in February. So let's jump right into the very first stock we're talking about today, and that is Walmart. Now Walmart, of course, known for its everyday low prices. They're the largest retailer in the world according to their revenue. And they have approximately 10,500 stores in under 48 banners of 24 countries around the world. And every week, approximately 220 million people use their store or their website. And it's because of this massive economy of scale that their business has remained resilient through several economic cycles. And of course, taking a look at the tip rank screen for Walmart, completely aside of the dividend, Walmart is looking at 23% potential upside in the next 12 months to an average analyst price target of $170.94. Walmart's stability is reflected in the amount of cash Walmart returns to its shareholders, this of course being in the form of dividends. Now consider this. Walmart paid its very first dividend in 1974, and since then it has increased its payout every single year. And now while this e-commerce industry is booming and considered a threat to brick and mortar retailers, Walmart has turned this into a catalyst. In the most recent fiscal quarter, their e-commerce sales for Walmart were 87% higher compared to 2 years ago. And the Walmart shares have been trading mostly sideways for the past year and currently offer an annual dividend yield of 1.7%. The company usually makes dividend announcements for the year in February, and given how well business has been doing, shareholders can look forward to another dividend increase from the retail giant next month. So with 23% potential upside in the stock price, 1.7% yield on the dividend that has been increasing every single year since 1974, Walmart is definitely on the list of companies you want to be looking out for or putting in your portfolio immediately to reap those kind of benefits. Now on to the number 2 company on our list today, and that's going to be Coca-Cola. You really don't need to be a stock expert to understand why Coca-Cola can be such a great pick for investors and dividend investors alike. This behemoth is deeply entrenched in the global beverage industry. It has many iconic brands and products being sold in more than 200 countries and territories. And even in a recession, a simple can of Coke is still affordable to most people. Now, as a century-old company, Coca-Cola has delivered enormous returns to long-term investors, and a big reason for that is the company's impressive track record of dividend growth. A quick look at the tip rank screen for ticker symbol KO will show an over 5.7% upside potential in the next 12 months to an average analyst price target of $64.17. So good to see some Coca-Cola growth pending in the next 12 months on top of their significant dividend. Now, early last year, Coke's board of directors approved a 2.4% dividend hike. That raised the quarterly payout from 41 cents to 42 cents per share, and that was the company's 59th consecutive annual dividend increase. So if history is any guide, investors can expect Coca-Cola to announce their 60th straight annual payout increase next month. The shares have climbed nearly 30% over the last year and now offer an annual dividend yield of 2.8%. While Coke has already built an established market position, its business is still growing. In the third quarter of 21, the company's revenue grew 16% year over year to $10 billion, while their adjusted earnings per share rose 18% from the same time a year ago. So another really strong company here, Coca-Cola, with a 2.8% dividend yield, which if you remember, Walmart was at 1.6. So Coca-Cola may not be poised to grow quite as much as Walmart is in the next 12 months, but their dividend is certainly strong. Now diving into the last stock on today's list, and that's Genuine Parts Company. Genuine Parts Company, ticker symbol GPC. Now, Coca-Cola's track record, that's impressive, right? Almost 60 years. But there are companies that have delivered dividend growth even longer, and Genuine Parts Company is one of them. 2021 marked the 65th consecutive year of increased dividends paid to GPC shareholders. And they are an automotive and industrial replacements parts distributor. They have a global network of more than 10,000 locations in 14 different countries, and the stock currently yields 2.4% for their dividend. Taking a look at the tip rank screen for ticker symbol GPC, we're looking at an upside potential of just shy of 12.5% in the next 12 months for an average analyst price target of $148, up from the $131 we're currently sitting at today. Now, the auto industry is known to be cyclical, but replacement parts, they're not. CPC's business has thrived throughout business and different economic cycles. In fact, since GPC's founding in 1928, its sales have increased in 87 of the 93-year history. From 2010 to 2020, the company's revenue increased at a compounded annual growth rate of 6%. And a consistently growing business allows this company to deliver an increasing stream of cash returns through thick and thin, that of course being their dividends. And now, considering that GPC's last dividend hike was announced in February, the next one is likely to come within the next few weeks. So those are the three companies we were talking about today as far as strong dividend growth and the potential to get that next pay raise in February when all three of these companies are poised to announce their dividend payouts for the coming year. Let me know in the comment section down below what you think of these three companies, Walmart, Coca-Cola, and GPC. As always, guys, thanks for checking out today's video. If you liked it, smash the like button, consider subscribing to the channel, and until next time, bottoms up.